Aries Crypto's learning series on Ethereum and ETFs. With this program, we aim to equip individuals and businesses with the essential knowledge and tools necessary for effective management and the growing field of using cryptocurrency to create profits and stability for your business. Subscribe to our channel to learn more about this and other relevant cryptocurrency subjects. We also offer an introduction to Ethereum workbook in the description, available immediately after purchase, which will help you understand Ethereum and implement strategies using Ethereum in your own business. We look forward to sharing our knowledge with you. Also, please like, share and subscribe to help us grow our channel and bring more education to those who need it. Let's get started. A big topic in the world of cryptocurrency right now is Ethereum and the potential impact of a new development, the approval of spot Ethereum ETFs by the SEC. Let's break down what this means. Ethereum is a leading platform in the cryptocurrency space. It goes beyond being a digital currency like Bitcoin. It supports smart contracts and decentralized applications, making it a versatile tool. ETFs, exchange-traded funds, are investment funds that track the price of an asset, like gold or a stock index. They're popular because they provide an easy way to invest in something without buying it directly. Spot Ethereum ETFs specifically track the price of Ethereum. If the SEC approves these ETFs, it will allow investors to gain exposure to Ethereum without owning the cryptocurrency directly. This is a big deal because it could bring more money and attention to Ethereum, potentially increasing its value and stability. The SEC's approval process isn't complete yet, but the recent decision to approve all 819b4 applications is a strong signal that full approval is likely. This move is seen as historic because it opens Ethereum to a new group of investors and could increase demand for its limited supply. The approval of spot Ethereum ETFs could have significant implications for Ethereum's future, potentially boosting its value and solidifying its position as a major player in the cryptocurrency world. The recent SEC approval of spot Ether ETFs marks a significant milestone for Ethereum and the broader cryptocurrency market. By allowing these investment vehicles to move forward, the SEC has signaled its growing acceptance of cryptocurrencies as legitimate assets, potentially paving the way for more institutional investment in the space. The impact of this approval is far-reaching. For Ethereum, it means increased liquidity and accessibility, as investors who may have been wary of directly buying and holding the cryptocurrency can now gain exposure through a more traditional investment vehicle. This could lead to greater demand for Ethereum, driving up its price and solidifying its position as a major player in the market. Furthermore, the approval of spot Ether ETFs sets a precedent for other cryptocurrencies seeking similar investment products. It could open the door for a wave of new crypto-based ETFs, giving investors more options for diversifying their portfolios and gaining exposure to the rapidly evolving world of cryptocurrencies. The SEC's decision to approve spot Ether ETFs represents a significant step forward for Ethereum and the broader crypto market, potentially ushering in a new era of institutional investment and mainstream acceptance. Let's delve deeper into the world of ETFs, particularly in the context of cryptocurrencies like Ethereum. Understanding ETFs. ETFs, or exchange-traded funds, are like baskets containing different investments such as stocks or bonds. When you buy a share of an ETF, you're essentially buying a piece of that basket. The value of your share fluctuates with the value of the assets inside the basket. For example, if you buy a share of a technology ETF, the value of your share goes up or down depending on the performance of the tech stocks within it. Types of cryptocurrency ETFs. When discussing cryptocurrencies, there are two main types of ETFs to be aware of: spot ETFs and futures ETFs. Spot ETFs. These are ETFs that hold the actual cryptocurrency. If it's a spot Ethereum ETF, it would hold Ethereum coins. The value of your ETF shares directly mirrors the price of Ethereum. So if Ethereum's price rises, the value of your ETF shares increases accordingly. Futures ETFs. Rather than holding the cryptocurrency itself, these ETFs invest in contracts that agree to buy or sell the cryptocurrency at a future date for a specific price. The value of these ETFs is based on expectations of future Ethereum prices, not its current price. The recent SEC approval of spot Ethereum ETFs is significant because it allows investors to invest in Ethereum through a more traditional investment vehicle. This could attract new investors to Ethereum and potentially boost its value. ETFs, as we've established, are investment funds that hold a collection of securities, offering investors a way to diversify their portfolios easily. But how exactly do ETFs work, and what makes them different from other investment vehicles like mutual funds? How ETFs work. When you invest in an ETF, you're essentially buying a piece of a portfolio that holds various securities. The ETF provider owns the underlying assets and designs the fund to track the performance of these assets. The provider then sells shares of the ETF to investors. ETF shareholders own a portion of the fund but not the underlying assets. However, investors in ETFs that track stock indexes may still receive dividend payments from the stocks in the fund. ETFs versus mutual funds. While ETFs and mutual funds share similarities in that they both offer exposure to a variety of asset classes and markets, there are key differences between the two. Trading flexibility. ETFs can be bought and sold throughout the trading day like stocks, while mutual funds are priced once per day after the markets close. Cost. ETFs often have lower management fees compared to mutual funds, which can make them more cost-effective investments over time. Tax efficiency. ETFs tend to be more tax efficient than mutual funds because they have a lower turnover of securities, which can result in fewer capital gains distributions to investors. ETFs provide an accessible way for investors to diversify their portfolios and gain exposure to various asset classes and markets. Their flexibility, cost-effectiveness, and tax efficiency make them popular investment choices, particularly for those seeking broad market exposure or to invest in specific sectors or themes. To better understand the potential impact of spot Ethereum ETFs, it's essential to consider the broader context of cryptocurrency investing and the challenges investors face in this space. Cryptocurrency investing challenges. While cryptocurrencies like Ethereum offer exciting investment opportunities, they also come with several challenges. Volatility. The cryptocurrency market is known for its wild price swings, which can make investing in individual cryptocurrencies risky. Security. Storing and securing cryptocurrencies can be complex and prone to human error. There's also the risk of hacks on cryptocurrency exchanges or wallets. Regulatory uncertainty. Cryptocurrencies operate in a relatively new and evolving regulatory environment, which can introduce additional risks and uncertainties for investors. How spot Ethereum ETFs can help. Spot Ethereum ETFs provide an alternative way to invest in Ethereum that addresses some of these challenges. Diversification. By investing in an ETF, investors can gain exposure to Ethereum without putting all their eggs in one basket. This can help mitigate some of the risks associated with investing in a single cryptocurrency. Simplicity. ETFs eliminate the need for investors to manage their own Ethereum wallets or deal with the complexities of buying and storing the cryptocurrency. Regulatory oversight. ETFs are regulated financial products, which provides investors with additional protections and oversight compared to investing in individual cryptocurrencies directly. While investing in cryptocurrencies can be challenging, spot Ethereum ETFs provide a more accessible and potentially less risky way for investors to gain exposure to this exciting asset class. As the SEC approval process progresses, it's worth keeping an eye on how these ETFs might impact Ethereum's future. Thank you for watching. We hope you found this video helpful and informative. In the description, you will find a link to our Introduction to Ethereum workbook, available immediately after purchase. Don't forget to check out the next video in this series for more valuable tips and strategies.